Kelly, it's like Rip Van Winkle. You and I could go back, and if we just closed our eyes to January and we look today, we think like nothing happened, right? The market's exactly where it was at the beginning of the year. We're right back to where we started, and I don't think the risks have really changed. They're what they were in January. I remember, Kelly, I was saying buy equities when everyone was panicking on tariffs. I said, this is not the new normal. I was on your show and said, have me back, but you did have me back, so thank you. But look, I think you have to look at where we are. This market was being driven on two things, tax reform and deregulatory. Neither one we've seen yet. And the one that has taken the spotlight that people underweighted in terms of risk were tariffs. And I'm being cautious, as we usually are. And when I'm right, I like to remind myself and remind you. When I'm wrong, I just don't show up on your show.
Right.
So we think that you're going to see a slowdown before you see the market roaring to 7,000. Look, I run a wealth management firm. I'm paid to be optimistic, and I am optimistic, but I'm also realistic. All right. We're at our conference, our cross-sector conference, and what we see is a real need for capital and companies that need to access the capital markets. And it's encouraging to see middle market companies start to go public now, but not nearly what we should see. We need to make it easier for companies to access the public markets. And by the way, Kelly, make it easier for the average investor to share in the wealth creation in the United States. That's through IPOs, and we need to see that. And that's what they're talking about here. That and AI. I mean, AI is, you can't go to a meeting without talking about AI here.